Hey guys, Fincho here from We Coach Crypto. Hope you're all doing well. I've been joined today by a very special and important guest. Okay, this is Shukry, and he is from MyCryptoTax.co.uk. How are you doing today, Shukry?
Hi, fine, thanks. Thank you for inviting me for your show.
You are very welcome. I'm really happy to have you on today, and I'm very keen for us to obviously talk. I think one of the areas within the crypto space that a lot of people have got very clouded, if I'm honest, there's obviously a hell of a lot of money can be made in this space. There are a lot of crypto millionaires and even billionaires that are out there. But some people don't even realize that there are tax implications that come with this, and it's a very serious part of the investment side of things. So what I wanted to do is obviously have a brief chat with you. I'd like you to introduce yourself, what it is that you do, and I'd like you to tell us a little bit really about the type of questions that you get asked and things that a lot of people wouldn't even realize. So please introduce yourself, Shukry.
Yeah, my name is Shukry. I'm the director at MyCryptoTax. We are a specialist cryptocurrency accountancy firm. We are a chartered management accountant regulated and monitored by our Chartered Institute and HMRC for money laundering purposes. And we've been doing cryptocurrency tax since 2017. So we have more than 700 cryptocurrency clients. Some clients obviously made a huge amount of profit. It's ranging from larger clients to smaller clients. Involving in like straightforward spot trade market into complex DeFi and CeFi and NFT space. So the crypto market is growing day by day. So the type of activities, it kind of grow at exponential space. So we are keeping top of the latest development. So we've been specialized in these areas. We are using various tax platform to facilitate their compliance, tax planning, and tax investigation support. So I'll go into much more detail later on in terms of our services, what we do. So for introduction, so we are a specialist firm focusing on cryptocurrency tax.
Brilliant. That's fantastic. So one of the things that I did want to ask you, which I think a lot of people hear about when they get deeper into the investment with cryptocurrency, is you hear a lot about business and corporate side of things and tax havens. And obviously you've got countries like Dubai and Portugal and Malta. So would you be able to talk to us a little bit about that and what that would entail?
Yeah. So when it's come to tax, we need to look at in two angles. First, we have to be considering the tax compliance and reporting. So if someone has invested in crypto and made money, primarily they have to deal with their tax side of things. And the second angle is how to be tax efficient and what are the tax planning tools available to mitigate their tax liability. In an extreme scenario, one option is to become a non-tax resident in UK for tax purposes, and that way like, they can avoid paying any capital gains tax in their future profit. So this is one option. As part of the tax planning, these are not only the first option, there are many other options like negligible claim losses, loss harvesting, pension, and normal conventional tax planning tools like pension, venture capital trust, and EIS. So we can run through this option to our clients, and depending on their suitability, they can decide what option to take. So some extreme scenario, some clients also have used this like to move to countries like Portugal, Dubai, Malta, and Monaco. These are more crypto friendly. Essentially, they don't pay capital gains tax on cryptocurrency. So so these options is available.
Okay, so what you're saying is that people have got the ability to be able to move to other countries, and that means that they wouldn't have to pay any tax at all.
That's right. So these options are available, but it is not easy of like you just take the passport and go to another country. There's a right way to do things and wrong way to do things. So before you move, you need to make sure you take proper tax advice, because there are specific anti-avoidance rule targeting this area. So normally we call it like temporary non-resident anti-avoidance tool. There is a 5-year restriction period. So before you take the move, you need to exactly know what the steps are, how you make sure previous tax affairs up to date, and then how you plan for the future without any problem. Otherwise, even if you move to another country, HMRC and the regulator have the powers to claw back the taxes from various other countries as well. So not only in UK, as a non-resident also, they can come after you and collect the taxes for any unpaid taxes for previous tax years.
I'm with you. Okay. And I think another thing that's really important to highlight is obviously this space is relatively new still. You know, if we think about when Bitcoin was created, and there's a lot of normal, and when I say normal, I mean, you know, your everyday accountant that really don't know a lot about this space yet. They haven't got that experience. But what I love about what you're doing, Shukry, is you were actually in very early, and you've also built a number of partnerships out as well. Would you be able to tell us a bit about that?
Yeah, so that's very crucial. Like if you are going to a specialist accountant, they should be able to understand. Very common question most of the potential clients come to us tell us is, okay, talk to my current accountant about crypto. Essentially, I am educating the accountant. Can you rely on accountant? You are educating them, you are providing all the information, they are doing the tax. So when I come to us, like they can say, okay, it's very comfortable, you understand what I'm talking about. Not saying that we know 100% everything, because there are a lot of gray areas. HMRC is two step behind. Like some of the latest development, like NFTs, there is a lot of gray areas in terms of how we handle the tax on these specific scenarios. However, that doesn't mean if they haven't published a guideline, that doesn't mean it is not taxed. Still, it is taxed. That's where we need to use our previous knowledges and experience within crypto to understand how, based on the published guidelines they have issued, like from 2014 onward. The first guideline the HMRC issued back in 2014. These are not new legislation. These are just merely a guideline note, which is kind of interpret HMRC's understanding of the crypto world. So the first one they issued back in 2014. Since then, they issued one guidelines in 2017, 18, and the latest one they issued in 2021. So pretty much they cover the basic stuff like, you know, spot trade, mining, and staking. Some of the advanced stuff like DeFi, CeFi, margin trade in derivatives and NFTs. These areas hasn't been clarified yet. Not only UK, HMRC and IRS are the two most advanced regulators for cryptocurrency. Both of them hasn't clearly kind of defined specific tax treatment for these areas. However, based on the previous guidelines, we can infer the tax treatment and take a kind of a more conservative or aggressive approach to deal with this. So you have both spectrum. So it's you need to take the correct advice to say, okay, do I want to take a more aggressive approach? Yes, you can take that approach, but the risk is in later on, if HMRC come back and say, okay, we don't agree with the aggressive approach, there could be a large tax bill backdated you need to pay. So always we recommend to go for the conservative approach, but we'll give the option of like both option, and then the taxpayer has the kind of more educated decision to make here, rather than just rely on say, okay, it's not taxable, or they didn't provide any guidelines, so we didn't have to think about it. That's not the case. Especially NFT is a very big area, because as you know, like this year is an NFT year, last year is DeFi and CeFi tax year. So these are the two areas which there's a lot of gray areas, because what we are looking at is even current existing tax legislation, because HMRC hasn't clearly defined any new tax laws. So what we're doing is everything based on existing capital gains and income tax laws. The last capital gains tax law we published is 1997. However, in terms of like using the rules to current scenario, we need to understand the technology, how the various jargon, how the various tools within crypto work, so that we can use the correct treatment in terms of handling their tax affairs.
I'm with you. I think it is so important that we have people like you in the space to be able to go to, because let's be honest, you know, the normal everyday person that has a full-time job and has heard about crypto and decides, yeah, I'm going to go and buy some Bitcoin and some Ethereum, for example, they're not even thinking about this. You know, the tax implications that come with it, it's not even on their mind. They're thinking, oh, this is going up in value. Fantastic. It's much later down the line. And I think it's so important that we're educating people and letting them know what the situation is, so that they can get in contact with people like yourself to give them that advice and guidance that they need, so that it doesn't catch up with them later down the line. And, you know, it could be a huge bill that they're not even in a position to pay at that point. So I think it's vital. And one thing I did want to do is come on to What are the most common questions that you get asked? Because I think that would be really valuable to anyone that's watching to be able to get you to answer those.
Yeah, so one of the key factors is a lot of people asking, okay, I haven't cashed out anything, so everything is, I kept it in crypto, so I don't have to worry about tax. That's not how it works. So the way that cryptocurrency tax work, cryptocurrency is considered as an intangible asset for tax purpose. What that means is, each time when you make a disposal, you are liable to pay capital gains tax. So the disposal include your selling crypto for fiat currency, or you are exchanging your crypto with another crypto. So that could include, like, changing from BTC to Ether, or Ether to stable coin, or stable coin to a fiat currency. All of them will be considered as a taxable event. And also, like, even spending crypto, like, if you might be using like a crypto debit card or credit card, you are spending your crypto, that is also considered as a taxable event. And the other scenario is like transferring your crypto asset to anyone other than your spouse or partner, also considered as a taxable event. So that means, like, these transactions need to be tracked, and you need to work out the capital gains, and then you need to pay the taxes. And also, like, sometimes people in crypto world passively earn income, like by staking or mining or just receiving airdrops. Some of them will be considered as income. So you need to keep tab of, like, your market value when you receive this token, because this will be subject to income tax. You will have risk of sometime even paying 45% tax ban, because the income tax ban ranging from 20, 40 and 45%. So if you don't keep tab of all of these, when you're trying to do the tax for your past period, there will be a huge tax bill. Not only the tax bill, you will also are liable to pay penalty and interest rate from the day tax is due. And in some instance, the penalty can range up to 200%, because the way that the penalty system works in this country, generally HMRC would expect you to take a reasonable care in terms of managing your tax affairs. So what that means is, keep proper record, notify HMRC, calculate your tax. If you don't understand how it works, seek a professional advice who kind of familiar with this space, so that you submit your tax return and pay the taxes. If you have done this, HMRC would assume we have taken a reasonable care in terms of managing your tax affairs. Failure to do so will be considered as a careless behavior. So the excuse says, okay, I didn't know how to tax, or my accountant didn't know how to calculate the tax. These will be considered as careless behavior. If that's the case, HMRC has up to 20 years, 6 years to go back and investigate your tax affairs. And in terms of penalties, it will range minimum 10% to maximum 270% for careless behavior. And the third type of behavior, HMRC deem deliberate concealment. If HMRC deem your behavior is deliberate and you are trying to conceal your tax affairs, and HMRC has up to 20 years to go back and investigate your tax affairs. And in terms of penalty, it will range from minimum 70% to maximum 200% for careless deliberate concealment tax affairs. So this is what, like, it's always, you need to make sure that you take precautions, do the tax affairs on up to date. And in case if you have any prior period unreported tax, then HMRC give a way out. Like, so for example, you can do an amendment or do a voluntary disclosure and pay a minimum 10% penalty and bring your tax affairs up to date. And also the other side of the coin is money laundering, because crypto money laundering is a very big concern. That's what, like, you can see most of the traditional financial markets like banks and lawyers, they don't, or even accountant, they don't want to deal with crypto, because the cryptocurrency since 2020 January is part of the money laundering legislation. So what that means is the exchanges and exchange wallet providers, they no longer can't refuse to share the data, because they have, if a regulator or HMRC requests information, they need to provide this information. We already know, like Coinbase and other exchanges, they have confirmed that they have shared all the data for since 2019 to HMRC. So they already sit with like large amount of data. They can easily target and go back and check your data. And then if you haven't reported, you need to take immediate action to make sure that you don't become a prompted disclosure. We understand with the discussion with HMRC, they are planning to send prompt letters to the people who hasn't reported their taxes. So before you receive the prompted letter from HMRC, make sure that you voluntarily report, so that not only you bring your tax affairs up to date, you also end up paying minimum 10% penalty. And also you can use this as evidence to confirm that there is no money laundering violation, so that when you cash out, you can show this as your tax return or the report from your accountant as evidence to clear your fund from the bank. Because I know, like, they all those banks are putting a lot of pressure because they have to comply with money laundering, because they don't understand how crypto work. Even if you explain like you are doing DeFi mining and these things, these will be kind of out of their radar. So the way they'll understand is if you submit your tax return, show your tax return, all my crypto activities have been reported, your accountant can substantiate there is no money laundering issues, then that would be the easiest way to take your funds out and be safe with your fund, hard-earned money what you have earned from crypto, so you can enjoy it.
I get it. That's some amazing information that you shared there, and I think it's so important that people take note of this. What I wanted to ask you as well is, in terms of people keeping an account, obviously, you know, people that fancy themselves as traders and actual traders themselves that are, you know, in the markets daily, what's the best way for you to keep an account of this? Is it best to just export the transaction history from the exchange itself? Should you keep a manual account of it? I mean, what would you suggest there?
Yeah, so as you understand, the tax rules are very complicated because for tax purposes, cryptocurrency considered as a fungible asset. So what that means is there are specific tax rules related to crypto asset. So the similar tax rules be applicable for other fungible assets like shares, gold, and silver. We use the same principle. So what that means is you need to have detailed transaction, buying and selling, receive date, all of these. So you can't handle this manually. Again, the fungible tax rules, section 164 pooling and 30-day rule, bed and breakfast rules, these are very complicated. So unless you have your transaction detail, you can't apply the correct tax calculation. For that reason, we use specific tax calculation tool where you can link your wallet or exchange account and extract information from there. Then we can classify and code your transaction correctly, identify your income, gifts and airdrops, fork income, do the coding properly, and then based on that you calculate your proper taxes, and then based on that we can prepare your tax return. So there are many tax calculation tools available in the market. We work with many platforms. We are exclusively partnered for many top 5 crypto tax calculators ranging from Coin Tracking Info, Coinly, Cointing, and also like we use Bitcoin Tax. These are some of the tax platform what we use. Depending on the type of activities the individual use, we will recommend the suitable platform for their work, because each of these tax tools have various capabilities. Like some connect very efficiently with DeFi platform or margin trade platforms or NFT platforms. So we will recommend the suitable tool based on the client's requirement, and also like we are partnered with all of them, so we get discounts for the premium price, which if you directly go with them. So if they come to us as a client, not only we will recommend the suitable package, we also can provide you a discount up to 20-30% discount from the listed price from if you buy directly from the providers.
Fantastic. That's brilliant. So I think probably what the best thing is for us to do from here, I'd like you to obviously explain about the services that you offer, but I'd like to invite you back on just to talk about some more, let's say, shall we go down the rabbit hole a little bit deeper, perhaps talk about things on a more advanced level. But I think as an introduction, this is a fantastic video. It's a way for people to be able to get in contact with you. Obviously, check out the website. You can see it right there. Okay, it's mycryptotax.co.uk. And we've met Shukry in person. We've done our due diligence. This guy knows what he's doing. Okay, but I would like you, Shukry, to please just explain a little bit about the services that you offer, how people can get in contact with you, and I'd love for you to come back on it again to obviously talk further as well.
Yeah. So in terms of our service, we do the tax compliance and reporting. So what will happen is we'll provide a tax calculation tool, look at through all your transactions, get all your information reconciled. Based on that, we'll prepare your tax return. If you have any other schedules like dividend, rent, or other income tax returns, what you have to submit for sole trader. We'll include everything, and we'll prepare your tax return. We'll become your tax agent. We'll submit your tax return. And once you submit, we not only just submit your tax return, we also provide a tax investigation insurance cover for all our clients. So the way it works is, once you submit your tax return, subsequently, if there's any inquiry, we will support your additional inquiry without charging you, because we will recover any additional cost from the insurance cover we have in place on behalf of our clients. This cost not only cover our fee, in case if they take you to court, it will cover the additional cost of hiring barristers and lawyers to recover any cost, so you'll get a peace of mind. And finally, we also provide tax planning service. As I mentioned earlier, there are a lot of legitimate activities you can do to minimize your tax liability, things like using your allowances, losses, negligible claim losses, partner allowances, loss harvesting strategies, some traditional tax planning tools like pension, venture capital trust, EIS. These options available. This is how, like, the wealthy people who had large amount of profit, they manage their wealth. So we can advise you how legitimate, because we are a chartered accountant, we can't advise you illegal tax practices or tax avoidance schemes. Everything what we provide and advise you will be a legitimate solution, legal practices which HMRC encourage the individual to take on board. A lot of people don't understand this. So if you don't know, you can't take advantages, because the most the way the tax planning work, you need to action these tax planning measures during the tax period. When the tax year finishes, you can't go back and retrospectively do those actions to take advantage. This is why very crucial you on board with an accountant who familiar with not only crypto, they're familiar with your tax planning measures available, so that they can legally minimize your eventual tax liability, what you have to pay. And that way you can save and make sure that you can safeguard your wealth and grow, and to take advantage of all those opportunities available.
Fantastic.
And in terms of, like, if potential clients are interested in using our service, the way we work, you need to book a consultation from our website. So we have 3 options: free initial consultation or paid consultation, either half an hour, 1 hour session. Unfortunately, we have stopped our free consultation until end of the tax year. So normally we have our free consultation booked up like 2 months in advance. So we have now currently stopped taking for the current tax year. So any free consultation would be from next tax year. So you can book it from February onward. However, if you have an urgent query, you can use a paid consultation. Either half an hour will be £150, or 1 hour session will be £250. This could be either Zoom call or any other video chat like Skype or team meeting, or in-person meeting in our office in East London, or a phone consultation, depending on the whatever the options you like to do. You can book these. So if you go to our website, there will be option for you to book these consultation, and then we are happy to go through your scenario, because the way the tax work, it is all catered for individual circumstances, because we don't have a one size fit solution, because we need to look at what type of activities they have done, when they started, they have any prior period tax requirement, and what their other income. So we can kind of cater the solution, what their portfolio size, what activities they have done, like normal spot trade or derivatives, margin trade, which exchanges they have used, have they got any missing information, like lost transaction, lost success. There are so many different scenarios we had to cater for. So we need to look at the individual circumstances. Based on that, then we'll advise, okay, this is a kind of solution, we can do it or we can't do it. And if you are doing, and the other thing I didn't discuss, like in terms of tax planning, we can also look at like alternative structure, like limited company or other structure, depending on activity. Maybe trading as an individual, maybe not the most tax efficient solution. That doesn't mean like just setting up a limited company alone not going to be the most tax efficient solution. So we need to look at your situation. Accordingly, we can advise, okay, for your circumstances, these are the options. This is how it will be taxed if you go to this route. This is how it will be taxed if you go on this route. So we can advise you accordingly, and then they can take right measures. So if they are interested in using our service, next step would be the look at our website and follow up on our social media platforms. So we share a lot of useful information in terms of crypto tax. There's a lot of new development every day. The crypto market is growing, so I don't have to tell this about what developments happening, and so we are trying to keep tab of all of this new development, so that we can cater to we always trying to be one step ahead. Like, NFT is a very big thing, so we are kind of working with other partners who can cater for this area. So we are trying to be, at the moment we don't have an automated solution, but like we are working through this so that hopefully next tax year, if they have any NFTs, we can handle this and support you throughout this your crypto journey.
I get it. And obviously as well, people need to understand that, it's such a new space. There's so many things that are coming up and being developed, and nobody knows the tax implications of these things, and they have to work this out. So there's a lot of hard work that goes on in the background. What I'd like to do is thank you so much for coming on today, Shukry. You've shared a wealth of information there. I'm hoping to get you back on again very soon. Obviously, we're trying to help educate people. We're trying to help 1 million people to understand cryptocurrency, and tax is a massive part of that. So guys, please check out mycryptotax.co.uk, and Shukry as well, your social media channels. How do they find you and what platforms are you on?
Yeah, so we have all our channels like Facebook, LinkedIn, Twitter. We are not that active at this time because like one thing is because we are inundated with clients, so we are reducing our social engagement because like kind of every day, because that's why sometimes even Saturdays we have to come take on board, kind of go through some of these. So yeah, so until December, end of December, we will be taking new client for current tax year. So yeah, so if anyone's keen, they can book a initial consultation and we can take it from there. Otherwise, if they can't come on board for this year, they can join our waiting list for the next tax year, and then we are happy to take them board like when we kind of fulfill the capacity for this tax year.
Great stuff. Brilliant. Well, thank you again for coming on today. Really appreciate it. And guys, remember, make sure you like the video, share it if you think someone would take advantage of the information that's been shared today. Hit the subscribe button and make sure you hit the notification bell so that you get notified for future videos. Thanks again, Shukry. And
thank
guys,
you very much. Thank you for having me. It's a pleasure. So we always involve in educating the clients, because last year we joined up with the head of cryptocurrency tax to do a webinar with Binance. So we always like to kind of educate the clients because it's a very niche area. A lot of people without unintentionally make silly mistakes, so they will cost you more. So that's what we want to educate them, so that not only save but like also like make sure that they keep on top of their compliance. So thank you very much. Have a safe journey, guys. Thank you very much. I'm happy to come and join another time to discuss any specific areas, or if any questions you have or your subscribers you have, just get a list of burning questions which we haven't addressed today. I'm happy to sort of go through one by one and clarify these areas in the future sessions.
Fantastic. I'll do that. And what we'll do is we might even set it up like an AMA, so people can actually join. We'll do it live. They can ask you any questions, and I think that would be brilliant. But thanks a lot for coming on today. And guys, we will catch up with you in the next one. Take care.
Enjoy your rest of the day. Have a good week. Thanks. Bye.
You too. Thanks.